Hello. So I wanted to put together a quick what's kind of changing with MTD for sole trades. And I figured the best way to try and display all this information is not just me sitting talking at a camera. It'd probably be having a PowerPoint, having something behind me where you can actually visualize the changes and follow along. So we've gone and tried it. Let us know in the comments if this format is good, if you prefer, if you'd like any changes or you prefer someone talking and graphics falling in on the screen. But we'll get stuck in. So today we're going to be breaking down MTD for income tax for sole traders, what it is, when it starts and who's affected, and exactly what you'll need to do every quarter. So let me minimize myself and let's get stuck in. So we're going to run through the core aspects of it. We're going to look at what is MTD, when does it start, who's impacted, what exemptions there are, the process itself, the software, the deadlines, the penalties. And then we've got a lot of people asking whether to switch to a limited company, so we'll cover that as well. All right, so what is MTD? Well, MTD stands for Making Tax Digital. It is the government's plan to modernize how tax is reported. Instead of one big tax return once a year, you'll send quarterly updates from digital records, and they'll summarize your business or your property income and expenses. So MTD is designed to try and reduce errors and give HMRC nearly real-time information, or as close to it as possible. So it's essentially going to break the self-assessment process into smaller chunks. And this is already mandatory at the minute for VAT, so some people may be familiar with it, and now it's going to come in to income tax. So to summarize, it's new for sole trades, and it is currently in place for MTD. So it's the exact same format. It's going to be quarterly updates, and we're going to have to do everything now through software, through digital records. So when does it start is obviously different depending on who you are. You can see it from the three examples on screen. It is going to become mandatory from the 6th of April 2026 for sole traders and individual landlords that have a combined, and I really mean that, the term combined is very important here, combined income of £50,000 or more. And then from April 27, it's going to extend to people earning above 30,000 of combined income. And from April 28, it will then extend again to 20,000 or more. And then that is expected to stay in place for 29, 30, 31, 32, so on. If HMRC know that you're eligible and meet the criteria, they will send you a letter confirming that you need to register or you need to be prepared to join. A lot of people might also get a letter that just says, we think you may need to register. They will do their best to nudge you and prompt you. If you don't know, you're going to need to reach out to your accountant, or you're going to need to look at what you submitted for the 24-25 tax year. If you haven't submitted it yet, then you're obviously in a good position because you'll be able to do the workings, get it submitted, and then get an answer. So who is impacted? So you're going to be impacted, you can see it there, if you're a sole trader or you're a landlord, or if you have multiple sole trades and property businesses combined. And like I say, your combined income has to be 50,000 or more for this tax year coming. And we'll run through an example of this in a few slides. So at this point, partnership income is excluded. So if your income comes from a partnership, you're not in Making Tax Digital yet. As well, director-based income, such as salary and dividends, as well as the company's income itself, are all excluded. Once you hit the threshold and pass it, you're going to have to stay on MTD for 3 years, even if your turnover does drop. The only way around this is if you stop trading and then therefore deregister, or you move laterally into a company and again deregister, and from your self-employment. So I'll touch on the company options a bit more towards the end of the webinar. So if you moved into a company, you would deregister from self-employment and you'd re-register under self-assessment. You just let HMRC know that your sole trade's finished, and then it's the same concept if you just stop trading altogether. So HMRC, like I say again, I want to reinforce this, they'll take a combined income from all your sources to see if you meet the threshold. So you really do need to be looking at everything you're pulling in. Exemptions. So there are exemptions. There's always exemptions when it comes to new processes with HMRC. You can apply for an exemption if you're able to demonstrate that you are with HMRC branded digitally impaired. For example, if your age, your health, or your disability, or your religious beliefs stop you from using a computer, tablet, or smartphone, then you can apply for the exemption. You're also going to be deferred until at least April 2029 if you are a minister or if you're the recipient of the Married Couples Allowance or Blind Persons Allowance. You can see that just down there, the 3 grey boxes. One other note on exemptions is that it hasn't been confirmed as of yet. However, anyone with a locked account, so people in the police or the military, will likely receive an exemption as well. And that is due to the fact that their accounts with HMRC have digital locks to protect them, and these locks will cause complications with self-assessments and getting gateways registered, which are all needed for MTD. There's nothing confirmed yet, but to be honest, that's the only way it can really go. So I would not be surprised if another exemption criteria comes out. And then just a quick note, if you feel like you meet, the age, the health, the disability, or the religious belief criteria, it doesn't necessarily mean that you're going to get an exemption, because if you have an accountant in place who's handling this on your behalf, then the HMRC would argue, well, that's what they're for. So, your age is irrelevant because they can do the work for you. So it might not be as straightforward to get the exemption as just saying, I am above, 80 and, don't know how to use these systems. So this is the longest slides. This is the most important one, and it is the whole process. And we'll go through an example in here as well. And I'll do my best to try and make it nice and clear. So this is where a lot of people are starting to panic. Honestly, it is more straightforward than it sounds. So basically, HMRC is now requiring a digital link, which basically means that your data needs to flow directly from your digital records into the software and then straight to HMRC. So they want no retyping, no copy and paste. They just want clean digital records. And all you need to do is keep those records in any HMRC approved software. And I'll show you some examples on the next slide. And then you need to submit an update every quarter for each trade or property business. And so one thing that's really important here is that the quarterly updates are not mini tax returns. There's no tax liabilities here. They're literally just an update. So you report your income and expenses exactly as they are. No adjustments, no allowances, no year-end tinkering. All that will belong in the final declaration. So a few quirks to be aware of. First, you're allowed to use estimates. That's obviously a really important one. And if something changes, you can simply correct it in the next quarter. You can even file a nil update if you don't have the figures in time. But if HMRC see a repeat nil submission every quarter, then they're probably going to start asking questions. And then the second thing that I think is really important to know is that if you're a joint landlord, you can choose to submit only your share of the income each quarter and leave all the expenses until the year end. That's absolutely fine under MTD, and it might be an easier way of doing it rather than trying to figure out on the hop how much of the split is yours and how much of the split is your partner's. So I'd say before we move on at this point, I think it would be really good to just look at an example of someone who actually has to join MTD and how those returns would look. So 50,000 threshold, that's going to be based, like I say, combined total income that we touched on previously, not per trade. So if you have a plumbing business or any sole trade business, you have some cryptocurrency that's been staked and therefore it's income tax. And you also have some rental income. HMRC will add all three together, combine their income, and see if that goes above the 50,000 threshold. If your combined income does go above the 50,000, then you'll have to submit a quarterly update for each trade. So that's really important. It's for each trade and a quarterly update for each property business. So if you are running a sole trade, it's like a plumber business or any other type of sole trade business, you have some crypto income and you've got rental income and it's all above the 50,000 threshold, then you're doing 3 separate quarterly submissions every 3 months. So you're doing one for the sole trade, one for the crypto, and one for the property. So it's going to be 3 every 3 months. And then at the end of the tax year, you'll do 1 final declaration. So you don't need to do 3 final declarations, you'll just do the 1. And then that's basically your self-assessment in a nutshell. So it's just filed through MTD compatible software instead of using the old portal or using your accountant can continue to use his software or her software, whatever it is they're using. So in this final declaration, this is where you would do your capital allowances, your pension contributions, your final adjustments, any corrections that you've made errors on in the quarterly updates. This is where you would do all of that. And then you calculate the actual tax bill, and that is the final return, which will then determine what your tax position, your tax liability is. And then, so just to reassure you, the rules haven't changed. Your deadline is still the 31st of January. That's really important. And your tax still works the same way. The only thing that's different is the method that you're using to submit it. So the entire process, end to end, is virtually the same concept. So we're just doing quarterly updates. Every 3 months we'll do an update to HMRC. Here's where I am. It's basically a mini profit and loss. Here's where I am. So you go sales, list all your expenses, and then in your final declaration you do your balance sheet position, do all your capital allowances, pensions, and any final adjustments. So this is the biggest slide. The process slide is the most important. I would suggest if you've listened through it and you go, that's quite complicated, maybe watch it back. Try and understand it. The process is really important. Obviously, look, we've got some things to note as well. And if you do get stuck and you feel like you need to talk to someone, we have booking links in the description below. So feel free to just book in for a call. We can talk you through it and we can explain what's going on. Key thing here is that you don't miss submission deadlines, because the penalties and the fines are obviously going to eventually stack up. The software is pretty self-explanatory. HMRC has a list. Follow the list. Pick one that suits you. If you're someone who wants to keep using spreadsheets, that's also fine. HMRC have bridging tools, so you could use the likes of Vital Tax. The key thing is that the data just has to flow digitally. Once you've got that, then it doesn't matter what you're using as long as it's on their approved software list. But like I say, it is quite extensive, so there should be something to suit you. Most of the major accounting providers are already compatible, so you can already go in now and get yourself set up and ready to go. And just to make it easy, I guess if you're not sure what software suits, because there is a lot of software out there, again, there's booking links below. You can just book in, have a chat. Someone will walk you through it and make a recommendation. We're currently recommending Xero, QuickBooks, or just Excel. Iris is on there, but that is an accountant software. So your accountant, if they're using Iris, they can do it for you. We use Iris, it's a very good system. So that's one we would prefer. Any clients that are coming to us and just giving us a digital record, say an Excel spreadsheet, and they don't want to file it themselves, we'll be putting it into Iris and filing it through Iris. So deadlines, really important. But before we look at the deadlines, there's one really important option that people don't realize they have, and it does make life easy. So you can see just to the left, HMRC has default quarters. So we're running 6th to the 5th of each month. It's odd and it doesn't line up with anything really in the real world apart from payroll. And in most sole trade scenarios, the payroll is not something that you're dealing with. So it does confuse a lot of people. You don't have to stick with those dates. So you can switch to normal calendar quarters, I guess we'll call it. So you can kind of see just below, you've got the first of the month to the end of the month. So in the case of MTD, they are fixed. So it would be the 1st of April to the 30th of June, the 1st of July to the 30th of September, the 1st of October to the 31st of December, and then the 1st of January to the 31st of March. And then if you did stick with the 6th and the 5th, it would be 6th of April to the 5th of June, and so on. But I would obviously advise that you move from the 1st of the month to the end of the month. For most people, especially business owners and especially landlords, these dates are going to make far more sense. They're going to align more with bookkeeping cycles and software and the way software want to report. And basically it's just the way nearly every other financial deadline works. Now, if you want to use the cleaner calendar quarters, you do need to set that up manually with HMRC. The default is going to be 6th to the 5th. So if you want 1st to the end of the month, you will need to set it up manually. You have to do that before your first quarterly update starts, which is then April. And you have to do it online through your HMRC gateway. So just remember that. Once it's set up though, that's it set up going forward. It's never going to change unless you change it. So for a lot of people, choosing the calendar quarters just makes a lot of sense. It removes a lot of unnecessary friction, I would say, and it makes the process a bit more predictable, easier to manage. Now, if you want to look at something that's a bit more practical, it actually makes sense to change the deadlines, because when you look at the deadlines on the screen, your April to June is due 7th of August, your July to September, 7th of November, and so on. So if you're running 6th to the 5th, you're actually losing 5 days for reporting. Whereas if you run 1st of the month to the end of the month, you're giving yourself an extra 5 days to get all your paperwork together and get something submitted to HMRC. So it might make more sense in that way to change it. The quarterly submission deadlines, like we're talking about here, like they're going to run the exact same as VAT. So if you're familiar with that, it's going to make a lot of sense. It's going to feel very familiar. Let me just move my head out of the way. So you get 1 month plus 7 days after the quarter end to submit your update. So that'll be from the 1st, so let's say 1st of April to the 30th of June. You've got until the 7th of August to make the submission, and then you can see the rest there. So July to September, 7th of November, and then we've got 7th of February, 7th of May. And then your final declaration, which again, like that replaces your self-assessment, is actually going to be due on the same date that your self-assessment would have been due. So it's going to be due on 31st of January as usual. No changes there at all. We would obviously advise, look, if you've done, once you do your 4th quarterly update and submit it by the 7th of May, you maybe want to consider just doing the final declaration straight away, because it's just going to make more sense practically. If you wait till the 31st of January, you'll have 3 quarterly updates in between your 4th quarterly update and then your final declaration. So that can get a bit confusing. So again, it's a process change, it's a method change, but the actual tax deadline and the way your tax is calculated is going to remain the same. Penalties, this is a really important one. You can see them on the screen. What happens when you miss 1 quarter, what happens if you miss a final return. So let's run through these. These are really important. It's going to use a point-based system. So again, the same as VAT, so some people will be familiar with it. You can see how it works just on the slide in blue. Every time you miss a quarterly update, I'll just move myself over so you can see that. Every time you get a quarterly update, HMRC is going to give you, every time you miss a quarterly update, HMRC is going to give you 1 point. You miss a final return, they'll give you 2 points. Once you hit 4 points, it's a £200 penalty, and then after that, every single late submission will trigger another £200 penalty point straight away, another £200 fine straight away. So once you're over that threshold, it can get expensive very quickly. Now, filing on time is one thing, but you also need to pay your end of year tax bill on time. So HMRC does give you a very short grace period, and I think the term grace period is a wee bit generous. But if you pay within 15 days, no penalty at all. 16 days onwards, the tax is still unpaid. Then there's a 2% penalty on the outstanding amount. And then once you hit 30 days, HMRC will add another 2%. And then daily interest starts building from there until the debt is cleared. Filing on time is going to be very important. Thankfully, MTD, we've kind of touched on it before. It does give us 2 very useful safety nets, which is that we can use estimates, we can file nil submissions. I think these exist specifically for you not to get fined and not to miss deadlines, because there's no other reason to allow it. It doesn't make any sense to allow it with the very concept of what MTD is, but it's there. So the system is a bit stricter in some aspects, but it's actually quite generous and flexible in others. Just stay out of the penalty cycle. That's the key thing. So go unlimited. I'll just pop myself back over. So go unlimited. At this point, you might be thinking, should I just go limited company? This sole trade stuff's getting a wee bit out of hand. And it is a fair question. And for some people, it's actually a really good time to look at it. But a lot of people avoid going limited because the admin's higher, it's more complex. You've got more returns to file. But now with MTD, obviously, the reality's flipped a bit. So limited companies, they don't have quarterly MTD updates. There's no plan to bring them in yet. It was initially supposed to come in. It's been cancelled. You've got a clearer structure. You've got cleaner reporting. You've got far more control on how you take money out of a business, how you tax it. Do you take it as a salary? Do you take it as a dividend? Do you take it as a disbursement? You've got all these options. So from a tax planning point of view, a limited company will give you more tools to work with. But I don't want that to kind of trigger people to just rush out and incorporate a business tomorrow just to dodge MTD. It still needs to be a proper decision. It needs to be based on profits. It needs to be based on growth plans. and how you actually operate and what industry you're operating in. But for a lot of people, especially those who are growing consistently and are currently earning over 50,000, going limited could be more efficient long term, probably will be more efficient long term. The majority of people, I guess, who are kind of attending this and listening to this are probably they're already captured by MTD. You're probably thinking, well, I am over 50 or I'm very close to it, I'm about to be over it. So going limited is probably been something you've been considering for some time now anyway. Again, I would encourage people in that position who don't know not to make a snap judgment, but instead reach out, message the team, speak to the staff that we have in here. You know, we've got a lot of qualified accountants in here that can help. So reach out, speak to us, see if it's something that makes sense. Bounce the idea off someone, and then if it is something that you want to go ahead with, speak to us about how to get set up, how to get started. Because just switching into a limited company from a sole trade, it can feel quite overwhelming. So you want to make sure that you don't do anything wrong, first of all, but that you're setting it up with the right intentions and you're setting it up with the right way going forward. So look, any questions, leave them in the comment section below. We'll do our best to respond to as many people as possible, or reach out. The contact details are on the screen. I'll move myself one more time so you can see the phone number, the email address, the website. If you want to send me a letter, there's the actual postal address. I don't think very many people send letters anymore. So reach out. There's a lot of contact links in the description. But look, thanks very much for listening. I do hope that it gave you a bit of an insight into what MTD is going to be. You might need to watch some parts back, but I appreciate you coming along. If you enjoyed the video, give it a like, maybe subscribe. We're doing a lot of stuff like this. We're trying to get a lot of content out, free information for people. We'll try and keep it in a way that's productive and it makes sense and it's useful, not something that's just random and generic. So thanks very much. Like, subscribe, and we'll catch you on the next one.